So right now the housing market is doing something we haven't seen in years, possibly decades. So prices aren't crashing, but they're barely growing. Mortgage rates aren't low, but buyers are still out there. So what's actually going on? Because depending on how you play this, you could either win big or get stuck paying way too much for a house. So let's start with the facts. Now, in early 2026, the average U.S. home value is around $360,000. Now, the median U.S. home sale price is still around that $429,000 mark nationally. But here's the key. Home prices are basically flat. So home prices are only up 0.9% to about 1.5% year over year, which is the slowest growth rate we have seen in decades. And that means the crazy price increases we saw around 2020, 2022, the COVID era, is essentially gone. This is no longer a prices only go up housing market. Now here's what's controlling everything. Mortgage rates. So right now in April of 2026, a 30-year permanent mortgage is around 6.5%. And that's the problem. Because even though house prices have stabilized somewhat, monthly payments are still high. And that's why affordability is the #1 issue in the housing market today. People just can't afford the notes anymore. And here's the crazy part. So earlier this year, around January of 2026, mortgage rates actually dipped below 6% for a short amount of time. And then when Iran kicked off, they jumped right back up. So that leaves buyers basically playing a timing game when it comes to taking out a mortgage for their house. Now this is where things are starting to shift. So inventory, which means houses that are available to buy or houses for sale, is rising. So currently, inventory is up 5 to 9% year over year, and homes are sitting on the market for longer. The average home is on the market now from 54 to 57 days, and that's a big change from the frenzy buying days. And that means buyers actually have options again. They don't have to rush in to buy a house for over listing price. And sellers, well, they're getting more realistic. Only about 16% of listings are actually cutting prices, which really means that sellers are pricing their home smarter up front, trying to go ahead and get rid of it. But even with more inventory available or more homes sitting on the market, sales are still pretty sluggish. Annually right now, we're selling about 4 million homes per year, which is still near historically low levels. But there's a twist. You see, sales are starting to recover slightly, but why? It's because buyers are starting to realize something like this might be the new normal housing market here in America. And by new normal, I'm saying how it was before COVID. No more 3% mortgage rates, no more huge price drops, just a slower, more balanced housing market. Now here's the real question. Is now, in April of 2026, a good time to buy a house? And the answer is, well, it depends on you and your situation. So if rates were to drop later on this year, which experts believe they will after the Iran conflict is resolved, you'll probably see more buyers flood back into the housing market. And when that happens, well, prices could start rising again. But right now, you have something that buyers haven't seen in literally years. #1 is more inventory. You have more homes to choose from in different price ranges, different areas. There's just more homes out there, and they're sitting on the market longer, essentially. You have less competition. Due to the higher mortgage rates, that's less and less buyers that can actually afford to buy a house here in 2026. And then of course, with homes sitting on the market longer, you have more negotiating power, right? These sellers are eventually going to want to get out of their house and sell it. So if it's been sitting on the market 2, 3, 4 months or longer, you may can get a better deal. Meanwhile, the sellers still have one advantage. Prices aren't collapsing. This is not the 2008 recession anymore. This is a slow reset, kind of selling back down from 2020 COVID. Not necessarily just a housing market crash. So here's my take. So the housing market in April of 2026 is more or less transitioning. Prices are flat to slightly up, that 1 or 2%. You're not going to see those 20% housing appreciations numbers that you saw during COVID. The rates, they're volatile, but more on the long term, I feel like they're going to be headed down, especially after we get inflation and the Iran conflict behind us. Inventory is rising, very good for buyers. It's turning more from a seller's market to a buyer's market. It's more favorable to buy a home now than it was, say, just 6 months ago. And sales, they're slowly recovering. There's still buyers out there. There's still, homes being sold every day. And this is what a balanced housing market actually looks like. We're so used to seeing, 5, 6 years ago with the COVID rush to housing and crazy appreciation numbers on these appraised values and houses going for overlisting. You're not really going to see much of that anymore. but we haven't really seen a balanced housing market in a very long time, probably since, 2010. So in summary, if you're waiting for a huge market crash like '08, you're probably going to be waiting for a long time. But if you're smart, this might be one of the best times to buy a house. It just depends on the deal and your situation. Anyway, I appreciate you watching the video, and I'll see you again next week.